Bonsoir, bon après-midi, bonjour à tous. So I will switch into English. I'm very pleased to coordinate, this corporate finance capital market conversation this afternoon. I'm François. I'm a partner at Rothschild. I'm responsible for the equity capital market advisory business, and I'm here together with Nicolas DUBOURG, with the CEO of FSP. So I think if we start from now, the subject is to try to discuss in a dialogue, between a key investor in the French market and ourselves and you in the room about the IPO market. We are in difficult times in terms of market environment, as we all know, because of the inflation, interest rates going up, and the volatility related to the Russian and the Ukrainian crisis. It doesn't facilitate, obviously, the IPO market, because IPO do need stability, do need a stable market environment. And therefore, the 2022 will be relatively poor. But it's also a very interesting time to think about how we can improve the structural environment to facilitate IPOs in Paris. Euronext, as you well know, is a very large market, attracting many investors. And there are many thoughts that I would like to share with you about how we can improve the quality of the IPO market, looking at IPO, post-IPO. So how do companies who do wish to get listed in Paris, how do they enjoy a secondary market, so an aftermarket post-IPO, liquidity, coverage of research and everything. So it's a kind of topic that I would like to explore today, having the chance to have a discussion with a core investor in the French market, the FSP, and Nicolas will describe to you who they are. But in order to have the vision of a long-only investor, so investors who are here for the long term, able to finance the French economy and to participate to IPO. Nicolas.
Thank you, François. And I'm very pleased to be here with you today. So I'm the manager, the CEO of the FSP. FSP is a French long-term vehicle funded by 7 insurance companies, French insurance companies. And we invest only in French equity. And we support them in the long term with providing 3 things. I would say the first thing is stable capital, long-term capital. The second thing is financing. And the third thing is a membership in the board of director, because we participate to the governance of the participation we have. So for the insurance company that support the fund, it's a way to support French corporates and support the growth and the transformation in the long run. So we are a specific object in the market, and I will come back later maybe on the way we analyze and we monitor our investment. As of today, we have 10 participation in the portfolios. The portfolios has a valuation of 2.5 billion. So you see it's big stake in average in each company. And we, in this portfolio, 7 of them are industrial and 3 of them are in the service sector. And we have participated in the last few years in 3 IPOs as a cornerstone investor. So we have, I would say, a view on the aspect how an IPO should be done, and what is a little bit of the condition for success in terms of IPOs?
So one of the questions, is that we may have is the timing for IPOs, because obviously you need not only a favorable market environment, but you need companies that come to the market at a stage where they are fit for IPOs. As you know, in the different capital market journey, companies do go first in venture capital or private equity. So there is a very strong judgment to have to decide, at what time a company is fit for IPO, is fit, to go into the public equity market. So maybe, Nicolas, one of the things that you could help us to understand is at what kind of maturity do you expect companies to come to meet you for an IPO, and what are the key maybe criteria that you are looking for in order for you to spend time on an investment opportunity?
Okay. So I will talk first about what we look at the company in general to study the investment and eventually to invest in this company, and then maybe I will give some comments about what are the three conditions, to my opinion, that are very important for an IPO and success. When we look at an investment, and it's also the way we monitor it during in the long run, we look, I would say, at four type of features. The first one is the strategic nature of the company. So it's specific FSP criteria. So is of course, for a French company, we look at the French assets. What is the know-how, the brand name, and the French footprint. This is something which is important for us. And in this area, we also look at the influence we can exercise on this company as a board member. Secondly, we look, of course, at the strategy and the reason for being on this company on the long term, and what steps the company will engage to transform and to provide growth. The third level of analysis is, of course, economic and financial performances. We set up KPI on this area. And the fourth one, of course, is what we call ESG, or in our world is a transition. We try to focus on company and help them to fulfill some positive trajectory in this area. If you want, I can. So when we look at IPOs and companies that are going to IPO, we look at that. Maybe in terms of sectors, since we are long-term investors, we are very keen to look at companies which are in the field of energy transition, of course, decarbonated industry, technology, or what we call quality of life, meaning health, agro, and food. This is mostly the kind of sectors we are looking at.
And when you look on technology, because when the market was very supportive, as we've seen in late 20 and 21, there was a big wave of IPO of technology companies. So today, with the performance of the market, and especially of the NASDAQ, they've been quite hammered. But we believe, and I believe, that technology will come back and is definitely eligible for IPOs. But would your vision of technology company have changed since the crisis, and how would you look going forward at tech companies under maybe different criteria, for example?
Yeah. What we see in the market as of today is that the tech company are very low in valuation because of the US market, and maybe because some prices were very high at some point, and a little bit decorrelated from the real economy. We have invested last year in one IPO, which is in the tech area. The company is Believe. Believe is, I think, a very strong company with very good fundamentals, but the price since the IPO is not very good for different reasons. and most of them, to my opinion, are not linked to the profile of the company. So I would say for the tech sectors in the futures, I think one of the main thing that they have to look at when they go to the market is the price of the IPO. The price has to be fair, and you need to have a sufficient number of investors. I would say also cornerstone investors that will look at the company and feel comfortable with the IPO price. So this is overall an entire process, and I think we can talk about that later on.
Yes, because as a practitioner in IPOs, one of the things which is critical is effectively to end in the pricing of IPOs, which is, as you rightly mentioned, fair, in order to provide a very good secondary market. And how can we improve maybe the dialogue between the companies and the shareholders that want to get the listing and the public equity shareholders like you, in order maybe to find a more balanced or more educated vision on valuation. We know that valuation can be very cyclical as well because of the trend in the market. But I'm very conscious that we need to have an approach on valuation which can run not only through IPO but through secondary performance, in order to create a very sustainable equity market in Europe and attractiveness for IPO in Europe. So the dialogue, as you rightly mentioned, we need to aggregate cornerstone investors. So in our jargon, it means that investors who are really keen to participate and express interest, before IPO, in order to provide the IPO process with the right parameters. But how can we mobilize maybe more French investors, mid-cap investors, international investors who are looking to French opportunities, to make sure that we have more interest and that this interest is properly disclosed to the different stakeholders?
Yeah. I think you were here a little bit before, and you heard that there are some things that are being done in the French market that are very, very useful. For example, with you banks or BPI or Euronext, you are in the process of a lot of meetings between companies that at some point will be going to IPO and some of potential cornerstone investors. So this is something very important because we learn to know each other better and before the operation. And this is very important. And to my opinion, you need three very important conditions for an IPO. First, the company has to go through a very tough preparation. It's not only the management that has to be prepared, it's also I would say all the company that has to be trained for the IPO. It goes through the communication, the finance, of course, the compliance also, because it's different, I think, when you are public. So this work has to be done, and it takes a little bit of time. The second thing is that you have to meet, as I would say before, some potential cornerstone investors. They can be financial, they can be industrial too. So this is also a part that should be in the scope of the and the discussion before the IPO has to be sufficient long enough. It cannot be 2 weeks. 2 weeks, it's too short to know each other. It's like a marriage. You have to usually know the person for a longer time. So it would take maybe 2 or 3 months, or maybe more for a certain type of business. So this is the second point, and I would say the last point you talk about that is the pricing, and maybe the liquidity and which comes from the book building and the free float.
For companies, to get to IPO and also to have a real life post IPO, there is a need of liquidity, volume, and coverage as well. So, do you think the companies do get enough?
you often you have different type of systems. Sometimes you have research at the beginning, and when you don't have enough free float on the long run, you lose research because analysts won't cover the stocks any longer at a certain point. But you see that when the company is successful after the IPO, you have more and more research going along because you have more and more investors interested in the stocks. So you have a strong correlation between the investor interest in the stocks and the number of analysts that will cover the stocks. So yes, we come back to the liquidity after all, to the fact that the company stocks has to be tradable and attract more and more investors when the company develops.
So do you have also a dialogue with your friends and competitors? So do you think that there is enough dialogue between French investors, for example, around these capital market opportunities? Because there is also a need to have a good base of cornerstone or anchor investors in France. So BPI is obviously very active. Do you think that you have enough of partners potentially that can go with you into IPO processes?
Yeah, it's my opinion. I think that you have a lot of potential investors. You know, you have a family office, for example, that could be interested. But to have more actors in this sector, we need to have success. And the success brings success. So collectively, and I think it's very important because for a company going to the market, it's a very good thing because you add visibility to your name and your business. It's a way to grow because you are able to find capital if you want to increase your capital at some point, and also you have access to the debt market, the public debt market, which is very interesting also at some point. So I think going on the market, it's a very good thing, but we need success and we need actors. We don't lack, I think, good companies to go to the market. Yes, you know that, François. There are a lot of entrepreneurs, scale-up, that are attempted to go to the market with a good project. They can be in the tech, but they also can be in industrial. This is something very interesting that we saw recently, that a lot of companies going to the market are not in the tech space or in the digital space. They were also industrial. So to my opinion, this is very important for France to have a scale-up and industrial companies trying to get finance in the IPO market. But for that, we need success and we need more and more actors. And so, I see there is a lot of initiatives for that.
Yes, because one of the big imbalance that we see in the market, that the French private equity industry is very solid, is very big, is raising a lot of money, and have had also very good performance over the last 10, 15 years. But it's definitely true that you need a public equity market which is as solid, because in order to achieve the returns, I mean, the private equity needs exit through listing. And today there is an imbalance between the number of candidates potentially which are in the portfolio of private equity and who could wish for exit, and the ability to organize a large and deep IPO market in order to fulfill that. And if you look at performance, I mean, performance is not only to get a right IPO at the right price on D-Day, but also 6 months, 12 months, 2 years later to still have opportunity, good volume and interest from investors. So in this difficult market environment where we are now, more for macro reasons, I mean, do you see that as good opportunities to reinforce your positions or to work along the secondary market?
Yeah, I think the market is we see today is lack of visibility. So we all know that, but it brings also some opportunities. So that's why we are looking at some specific sectors. I think if you want to invest in energy transition and you find the good horses to go that, at the end, if you are long-term investors, I think it's a very good choice. So you have to be very specific on your sectors. Each time you have to go through an analysis of the company, and what we do, we try to project the company and its competitive advantage for the past 10 years, because as a long-term investors, we are not going to sell the company in the next year or in the next two years. So we have to do that job. So we are a little bit slow sometimes, but what we did recently, we look at all the IPOs. We of course, it's public. We did not go to participate to all, not because of the price, but because it was not directly on our scope of universe. But we looked at them because it's interesting for us to be able at some point to invest in this company that sometimes are very interesting, maybe a little bit too young, and we can take advantage of the market situation to do an investment. So I think the secondary market, it's also interesting, but we come back to the free float, because if we go into an investment, we will eat a part of the free float. So I come back to this. I think when a company goes to IPO, it has to have a clear path on how the liquidity will be created through times. If you don't have, yes, you can go to the market with 15% of free float. It's okay, but at some point you have to have a path for 30% of free float. I would say in the next 2 years after the IPO. I think it's very important to attract a lot of investors and some stability in the stock value.
You are also in a very unique position because you are managing money for the main insurance company in France. How do these people think today in terms of asset allocation? Because there are major changes in the valuation of the equity market. Interest rates are, for the first time since a very long time, moving. If you are a large insurance company and looking to how do you want to run your portfolio in this environment? I mean, does that lead for you to get maybe more money to invest?
Yeah.
Or regulation for insurance companies is still very strict and doesn't help?
Okay, it's a very interesting question. I don't know if I can answer for the insurance companies. Recently, we have invested in, it's public, in Soitec. It's a French tech and industrial company. So that I would say that shows that even in a difficult environment, we can take a decision when there is a good condition for us to make a deal. I will say that we are a little bit contracyclical, because as a long-term investor, we can look at good companies, and with a price we could be attractive. My view about insurance companies is that they have to allocate the capital through times, and as of today, there are also some opportunities in the debt market for them, because they are looking for yields, and it's been a long time that they were not attractive yields in the market. So they of course, I'm sure they will enjoy this kind of asset, and that's part of the job.
I think we have 5 minutes left, and I think it makes sense if also this session can be interactive. So is there any question in the room? I mean, anyone has some points to raise? Go ahead.
Yeah, since it's public, I can. So in the order, so we have SEB, Arkema, Safran, Eutelsat, Tikeo, Elior, Neoen, Valeo, Believe, Soitec.
There is another question, I guess.
Under which circumstances do you consider fundamental analysis, that means strategical and modeling of the market, to be relevant to make arbitrage on the condition of investment, when you know that several trends in the past has been purely based on the on conformist attitude towards welcoming sector or investment, like fashion. Do you think that fundamental analyses are more required than what usually do people who don't use economic models except to have extrapolation of previous results?
Yeah, it's a complex question. Yes, I can tell you what we do as a long-term investors when we analyze a company. We try to modelize the bottom line, the cost, the cash flows. But we rely because we try to see after 10 years. So usually we rely on a strategic analysis. So we do it in different ways, and then we have a projection of the business plan of the company for a long time, and we try to infer a price with that, with different scenarios. So. But we incorporate what I mentioned in terms of criteria, and we see if overall everything seems okay with our philosophy of investment. So we have, I would say, maybe a different approach from the market that usually looks at 6 months or 12 months price. This is the way the target price are done now. We have a different view. I will say that we are more in a approach of a private equity fund than a public fund in the way we look at companies.
François, Nicolas, maybe a last question. So with an increase in interest rates and also in credit spreads, etc., it's evident for a number of players the level of leverage they have achieved will not be sustainable going forward. So what does that mean? By one or another, there will be a need for deleverage. A need for deleverage means more equity. So we can expect, unless you disagree with me, that medium term, and I'm not able to define what the medium term will be, medium term, the access to the stock exchange will be fundamental. We can also anticipate that with the amount of money we have to spend to finance the energy transition, at least we know it will be more now on a relative value basis via equity than via debt. So do you agree with this approach? And can you forecast when, I know you are not a wizard, but when do you think we will see this new positive wave of investors going into the stock exchange?
Well, my vision is that maybe today we are a bit at the peak of what we call a risk aversion, because for the visibility is very low in terms of inflation, interest rates, growth, recession risk, and obviously the geopolitical risk. But there is always a price, and there is always stabilization. So as soon as we get on interest rates, some stabilization, which means that the yield curve will be where it will be, but at least the equity investors can understand how to price the risk, then I think we will go to some normalization. And then maybe the way I would describe the IPO market or the equity market in 23, 24 is maybe to come back to maybe something a bit more traditional, which if you remember a couple of years ago when we had IPOs, we had LBO, private equity firms, coming out with very good assets, who were leveraged, because it was an LBO. And the IPO day was a critical day to normalize the capital structure and to bring a leverage at 4 or 5 times EBITDA to something which is much more comfortable, for public equity market, let's say below 3 times. And so which means that the IPO day was not a day where private equity, for example, would sell a lot of equity, but they would raise money in order to deleverage and fund growth. And I think that, as you rightly mentioned, if you come out with the right assets, let's say everything which is related to healthcare, energy transition, as we well know, when there is a crash and then there is a new, growth cycle, it's never on the same topics, on the same sector. It happened in the 2000, it happened in 2008. So the key question is, what kind of growth company with reasonable value will go to market to chase for equity in order to fund a good growth? So I think that I'm really expecting a pipeline of very good companies, because we know where they are. They are in private equity funds, they are in venture funds, they are in growth funds. So the company exists, and for the one who perform, who can sustain this environment with less visibility and more inflation, but still perform and outperform, I'm sure that equity investors would be very keen to participate in this kind of new IPO flows. But I fully agree with you, IPO is meant to fund growth, and an IPO is, by definition, a capital increase in the first stance. Thank you.
Thank you.